Delta Corp recorded a soft performance in what's a traditionally strong third quarter. Earnings disappoint on a higher base. The management tells CNBC-TV18 it'll be a few quarters before the online gaming business for the company is profitable, though capacity addition in FY24 could be a big trigger.
CLSA turns bullish on metals, says China reopening presents a new lease of life for the sector. They raised target price on Hindalco as its top pick. Issues upgrades on Tata Steel, JSPL, while it sticks to its underperformed rating on Vedanta.
ICICI Lombard's third quarter profit fails to meet estimates. The stock corrects over 3%.
TVS Motor reiterates its commitment to electric vehicles. The management tells CNBC-TV18 on the sidelines of the Davos summit that they invested 1,000 crore rupees in EV segment last year, and the major focus has now shifted to electric vehicles.
JTL Industries up around 13% as the board says it will mull a fundraise on the 20th of January. Stock higher by about 12%.
Well, hello and welcome to Chartbusters. I'm Nigel D'Souza, and joining me as always is Mangala Malu. Well, Mangalam, yesterday we had a good session. The data points that came in from the FIs were quite bullish, whether you're looking at the cash or even the F&O market. And today we're seeing some bit of follow-through. However, I think the fresh breakout will come only once the Nifty bank can get past the 20 DMA. That comes in at around the 42,650 or thereabouts. So just keep that in mind. We almost went there. We've cooled off yet again from the top of the day. So that's an important trigger. The breadth of the market still in favor of the number of stocks that are advancing.
Yes, Nigel, looking good for the first 1 hour of trade or so to say. Let's see where we go from here. 18,250 thereabouts on the Nifty could be an important resistance as well, a mark where we have faced some headwinds in the past as well. For now, the market meanders around that 17,900 to 18,200 sort of range. Are we likely to break out or break down of this range in the near future? We have Ashish Kyal joining in with a quick technical check. Ashish, your thoughts on the markets? I mean, every time it goes towards that 17,800, 17,900, we see a pop, and then it looks like we may cross that 18,250 mark, but that doesn't happen. And every time we, look like we're breaking above that, we fall back right down to 17,800, 900. Your thoughts?
Hi, Mangalam. Morning to you and all the viewers as well. You're absolutely right. See, what happens when the market is at around 18,250, you think it's just breaking out and you want to buy, and then it reverses and you lose positions. Similarly, there is an important GAN support level at 17,756. So we have been oscillating between that GAN levels of 17,756 and 18,293. Those are the levels between which the market is moving. But over short term, if you look at the smaller charts, maybe an hourly chart, you will see a classic inverted head and shoulder pattern giving a breakout yesterday. And today there is a follow-up session as well. So we are expecting a target of 18,250 back towards that level from here on. So any dip from here, maybe towards 18,050, 18,060, can provide a buying opportunity for the target of 18,250. And on the downside, maintain a stop loss of around 17,950. Also, one very important data point is if you look at the open interest, we can clearly see a huge rise on the put side open interest at 18,000, and the calls have been start covering. So that suggests that the overall OI data is also bullish, and people are betting that the market is going to protect that 18,000 at least over the coming expiry.
Okay, all right. Hi, Ashish. What about individual stocks? What do you have for us?
The first stock pick is going to be Kotak Bank. We can see that Bank Nifty is struggling to some extent, but Kotak Bank has managed to give a very good move on the upside, managed to cross that 20 DMA right now and sustaining there. So looks like the stock can move up higher towards the level of 1950. So one can create long positions in Kotak Bank, keeping a stop loss of 1755 for the target of 1950. And the next stock on the buy side is going to be Redington. We can clearly see a very good formation of flat pattern and a breakout happening now. There is a moving average crossover. The volumes are picking up. So everything is suggesting bullishness for Redington, probably starting the fifth wave on the upside for the target of around 204. So long positions can be created in Redington, keeping a stop loss of 184 for the target of 204.
All right, Ashish, just a view on Oil India. I'm looking at Oil India. It's seen a big spike right now. In fact, this week it's up 6%. Most of the gains coming by in just the last few minutes, 4.5% in the last 15 minutes odd itself at the high point. And this usually benefits when, oil moves higher. Brent is closer to $87 per barrel right now. And perfect recipe for all these upstream companies like ONGC, which incidentally too has moved to the high point of trade. Your thoughts on both these counters, ONGC and Oil India?
I do agree. If you look at Brent crude, it moves in a very cyclical pattern, and we can clearly see, I think, the crude correction that we have been witnessing over the past few months might be coming to an end, and we might start seeing again an upward thrust. This is going to definitely help companies like Oil India and ONGC, and we can see that Oil India, along with ONGC, has given a very strong move. So if we talk about the levels of Oil India, I think it can head towards the move towards around 260 on the upside from where it found some resistance. A good breakout happening now. It's moving above that trend line support, and on the downside, the support is at 224. So as long as 224 is intact, we can see it going towards that level of around 260 to 265. And as far as ONGC is concerned, it's still yet to break out. We are seeing a triangle pattern formation right now. A breakout will come above the level of 151. If it breaks 151, then yes, we might see ONGC heading towards that 160 level. And on the downside, the important support is at 145 right now. So let's wait for ONGC to break that out, the triangle pattern, and then we can get a good target of 160.
Okay, all right. Thanks a lot for joining in, Ashish, and filling us in with all of those details. By the way, from Bloomberg, we're getting some information that Ashok Leyland will supply 500 buses to the Sri Lankan government. So an incremental news coming in on that front. Stock more or less flattish as we speak. But it's time to shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Nandish Shah of moneycontrol.com joins us to talk about a stock that is tracking very closely. Nandish?
Hi, today's ideas for profit is Heritage Foods, Southern-based dairy company with a legacy of more than 30 years. Heritage is a fully backward integrated dairy business with a presence across 11 states and serves more than 1.5 million households daily. HFL derives nearly 67% of the revenues from milk and the rest from value-added products like dahi, buttermilk, lassi, and other dairy products. HFL plans to increase the share of value-added products from the current 30% in September 2022 to more than 40% in the next 4 years. Margins in the value-added segment is almost 1.5 to 2 times higher as compared to milk. The company aspires to grow more than the industry average. As per the industry report, dairy sector is likely to grow by 15 to 16%, while Heritage plans to grow by 20 to 22% on the back of higher milk procurement, improving share of value-added products, reducing supply side issues, and bringing in more efficiencies in processes. HFL is in a sweet spot given the consumer reach, brand loyalty, and robust financials. The company has proposed and approved a rights issue in the ratio of 1:1 at a face value of ₹5 per share, and the record date for the same is 20th January. Based on the last 10 years, HFL is trading at a steep discount as compared to its historical average of 20 to 22 times. We recommend investors to buy at current levels and subscribe to the rights issue.
All right, Nandish, thanks a lot for that. In fact, on that note, we'll take a short break. As we do that, here's an important information for you, our viewers. Don't miss out on the 19 must-have stocks in your portfolio. You wonder what those stocks are? To know the full list, subscribe to Money Control Pro. These are 19 stocks to watch in 2023. Must-have in your portfolio. Welcome back. The Nifty holding around that 18,121 mark. The mid-cap index actually picked up some pace right now, up around 0.3% for that index as well. So we'll monitor situations as they arise. But as far as ITC is concerned, I'm just looking at that stock holding mildly in the green. HUL has moved to the high point of trade. But talking about ITC itself, yesterday they made an announcement of buying near 40% stake in Yoga Bar. In fact, what they'll go ahead and do is they'll buy the entire company over the next 3 to 4 years. But immediately in the next month itself, they'll buy about 39.4% stake in the company for about 175 odd crores, valuing them initially at around 445 odd crores. They will also invest another 80 crores over the next couple of years for a total stake of 47.5%. And the balance stake will be then acquired basis predefined valuation criteria. Why is this an important update for ITC and a mild positive as well? Because one, The market size of healthy snacking, etc., is close to around 45,000 odd crores. Yoga Bar has been growing extremely fast in that as well. While currently the sales are just around 68 odd crores, remember a couple of years ago it was 30 odd crores, and with ITC's distribution might, scalability is something that we'll be watching out for. Tranche 1 of the deal has been done at 6.5 times FY22 sales, which is higher multiple as compared to what Tata Consumer paid for something like a Soulful, etc. But then again, scalability is something that we'll be watching out for. A positive news.
Okay, all right. Scalability will be tracked on that front. First take, it looked a little bit expensive, but scalability is something that the street lacks. Well, let's move on then. Eris Life, that's moved to the low point of the day. Remember, they've acquired 9 derma brands from Glenmark. Ekta is with us to run us through all of those details. Ekta?
Well, an interesting M&A which has taken place between Eris as well as Glenmark, where Eris Life Sciences is going to be acquiring 9 of Glenmark's dermatology brands. The entire deal size is around 340 odd crores. This is for the Indian markets. The deal will come in at around 4 times FY22 trailing sales. Now, in terms of Eris, a couple of key points with regards to this particular deal is that brokerages such as Incred have pointed out that the portfolio that they've bought, and a couple of analysts have also called it tail brands of Glenmark, have seen little growth over the past 3 to 4 years, and hence the valuation is not cheap. Now, separately, Eris has also come out with its Q3 FY23 numbers. The organic growth recorded by them was around 9.5%. So that missed expectations of around a mid-teen growth. The margins also did not see much of an improvement on a Q-on-Q basis. So it came in at around 32% versus 36.6% year-on-year and versus 33% in the previous quarter. The companies also cut their guidance because they want to factor in a delay in new launches plus inventory write-off in one of their drugs, which is a multivitamin ZAC-D. Now, the revenue growth guidance is cut to around 25 to 26% for FY23 versus 30% earlier. EBITDA growth guidance has come down to 14 to 15% versus 16 to 17% growth earlier. Now, for Glenmark, however, this deal would be positive, where they are divesting multiple brands, non-core assets, which they have been undertaking in the past couple of years. So it goes back to around 2020, where they did divest the female hygiene brand V-Wash to HUL. They divested certain select anti-allergy brands to Dr. Reddy's as well in the Russia CIS market. 2021, they raised money via the API arm IPO. Plus, they licensed a drug under development for 180 odd crores. 2022, just a couple of weeks ago, they did sell a cardiac brand to JB Chemicals for around over 300 odd crores. And now they've sold their dermatology brands as well. So overall, the view is that they are doing this to reduce debt, which is one of their key objectives for FY23.
All right, Ekta, thanks a lot for that. That's about Eris Life Sciences, low by about 2% right now. HUL has moved higher to the high point of trade. In fact, we were just talking about it yesterday as well. It did a good move. Tomorrow, the company reports its numbers. So that is a stock that I'll be watching out for. Everyone will be eyeing management commentary more than anything else on that counter. HUL has moved to the high point. But metals, Nigel, they're buzzing back again today.
That's right. CLSA, they've gone ahead and they've upgraded select stocks. So for Tata Steel, they've upgraded the stock to outperform from sell. They've upped the target price around 130 rupees. Similar is the case with JSPL. They've upgraded the stock and the target price moves from around 430 all the way to around 610. On Hindalco, that's a top pick. They have a buy rating out there. Target price has moved to around 580. While on JSW Steel, they maintain a sell rating with the target of around 640. Vedanta as well, underperformed rating out there. Target price around 295. Now, let's state the 3 broad reasons out there. On China, first of all, the reopening is picking up momentum, and also there is some stimulus that's being pushed in. So that's good news. Point number 1. They're saying, though, that demand on ground, they still need to see visible signs of improvement. So post the Chinese New Year, you'll get a better sense out there. And if that's strong, that's giving you a stronger case for re-rating. The US recession then, point number 2. They said that that looks imminent, but it could be softer than earlier envisaged. So that could be a positive as well. And coming to India, which is point number 3, they say domestic demand is resilient, rock solid, and also given that many of our domestic steel players are adding capacity, well, our dependence on exports is far greater now. So we'll have to keep an eye out on that front as well. Put all this together, metal stocks doing pretty well today.
All right, so that's about the metal stocks. We'll slip into a short break. On the other side, we'll get you all the highlights that we're getting from the World Economic Forum's Davos Summit after this short break. Stay. Well, two things are doing extremely well right now. One is the Nifty IT and the other one is ITC. So the IT index is at the high point of trade. ITC too has moved to the high point of trade. Almost 0.75% in terms of gains coming here. That's IT. Let's move on to ITC and CA. Nigel, Yoga Bar, the acquisition that they've made.
Have you tried it?
Have you tried it?
I have not yet, but
I know one thing. I've tried the yoga. You've tried the bar.
Malu.
I never thought that would come, huh? Well, let's move on.
I'm wondering whether in the time to come it will turn around.
I don't think it will turn around. I mean, you can try yoga, but I'm not sure about the bar. Maybe milk bar if you must, but
let's move on.
That expression tells you you're not trying the milk bar. But let's talk about some cars, etc. Launched in 2019 for a period of 3 years, the second phase of FAME, or the Scheme for Faster Adoption and Manufacturing of Electric Vehicles, is set to expire on 31st March 2024. With a scheme of 10,000 crore, the outlay has incentivized sales of 8.2 lakh vehicles so far, while the industry is unanimous in its view that the current levels of subsidies must continue till 2030. The government is currently not keen on continuing subsidies for a third time. Parikshit Luthra joins in with the exclusive details. Parikshit.
Yes, there is a question mark on whether incentives under faster adoption and manufacturing of electric vehicles scheme will continue after 31st March 2024. Sources tell CNBC-TV18 that the government currently does not see merit in extending subsidies under FAME for a third time or making a fresh allocation. The reason is that the government believes that the ACC PLI for vehicles, components and existing subsidies have already incentivized different aspects of the electric vehicle value chain. Sales of private electric cars have increased without incentives and continue to increase. One view is that if subsidies have to continue, then it should only be for R&D into advanced battery technologies apart from lithium ion, such as sodium ion, aluminium ion and zinc ion. Secondly, government is also exploring the possibility of keeping subsidies only for electric vehicles with very high levels of localization from the 50% localization currently. Another reason why the government is not keen on extending subsidies is that the PLI scheme and battery swapping are set to bring down overall vehicle cost. Officials also want the EV industry to take advantage of local cell manufacturing in India, which they feel could bring down the battery cost as well. But no final decision on extending or ending FAME subsidies for a third time has been taken. Sources say a call will be taken in the second half of 2023.
Okay, all right. Thanks for that, Parikshit. Well, staying with the EV team, the JSW Group is actively considering a big bet on electric vehicles. That's the word that's coming in from the chairman, Mr. Sajan Jindal. He spoke to Shireen Ban. He said that he's looking at sites to set up a factory to make a high-end electric car. Let's hear him out.
I believe that EV is the wave of the future for mobility, and I gave up at that time thinking that all the auto majors would go in a big way in the EV, but I realized that after 4 years of giving up the EV segment or giving up the idea of going into the EV, not much has happened in India. So therefore, I'm kind of contemplating to re-enter that phase.
Two-wheelers or cars?
No, it'll be a car, very high-quality car, because India, we don't have a high-quality EV right now, and the global majors are coming out with very quality EV cars, and therefore I believe that that's a segment, that's an area where JSW Group can play an interesting role.
Okay, so back on the table as an active consideration.
As of now, yes.
By when do you hope to finalize? Yes or no?
No, yes and no, I think next 3 months.
Oh, okay, as early as that.
Yeah.
What is holding you back?
No, not really. We are just studying the landscape, studying the technology, and looking at where we would like to build it, which part of India. So, so these are the things that is under discussion at the moment.
Okay, so if it goes through and you sign off on it, what is it going to mean in terms of ballpark investments? You said that you don't need necessarily a partner, but would it make sense to have a partner on board? Is that something that you may want to reconsider?
Not really. We have thought about it, and now the technology is readily available, so there is really no need to bring in any partner. And what I want to do is to bring in a product where we Indians can feel proud of, and we would like to export that product out of India. to European market and to the most developed market, auto market in the world.
All right, on that note, what we'll do is we will wrap up on this edition of Chartbusters. You stay tuned to CNBC TV 18. Trading Hour comes up next.